Hey, Top Gun Options traders, Matt Buckley, call sign Wiz, joining you from Santos, Brazil, right outside Sao Paulo. Got in here early this morning, and great flight from Miami. Looking forward to working with some folks down here, help them take their investing to the next level. So let's get started. I have a primary trade alert I want to get out, and you're probably, for regular listeners or Top Gun Options folks, you're probably going to be a little surprised at the target I selected for this trade alert, but we're going to go through our strategic mindset. We have got to talk about what happened overseas, though. Sarkozy got the boot out of France, and obviously Greek voters booted all of the austerity folks, people who wanted to rein in Greece's debt problem, its spending problems. Everybody got voted out of office, so all the adults got voted out, and it's going to be interesting to see what happens. Germany and Angela Merkel. It's going to be interesting to really see what happens in Europe. As I predicted last week, I think the end of the Eurozone is near. It's either a couple years away or maybe even closer. But, you can see the market took a tumble at the open based on this. But let's go right to our trading account here, our paper trading account here, and look at volatility. Look at essentially. Let's go look at the VXX real quick, since we're long some of those calls there. Hardly even it's down. Actually, I expected a pretty big move out of not a big move, but a relatively big move out of some volatility. And you can see we got a little bit of it this morning, and then we just kind of did the slide for life here. So again, vol just does not want to enter the picture, and it's really creeping options traders out, folks. That vol, everybody's whistling past the graveyard with that. So all right, let's get to our trade. Strategic mindset is still market neutral to a moderately bearish bias. You all know that I believe that this is a Fed-induced rally. If the Fed were not, adding so much liquidity to the market, and with the prospects of QE3, with the bad jobs report on Friday, people, traders are actually happy because, or actually they're happy to indifferent. They wish the news would have been worse, if you can believe that, because they were hoping for another round or some mention from the Fed and Bernanke of quantitative easing, another QE round of QE. So we're kind of in this weird area. So, but based on that strategic mindset, one target I want to take a look at that's really getting hammered, got hammered on Friday, and it's getting hammered again today, is AIG. Now this is a 3-day chart. Why did it gap down here? Well, guess what? 140 billion of yours and mine's tax dollars went to bail out this company back in the day, right? Let's take a look at that. Let's pull up a 10-year chart at AIG. You want to talk about a slide for life? There it is. I mean, remember when the stock, before the financial tsunami hit? I mean, look at what that was. AIG was trading at. And now, obviously, after the financial tsunami and the government bailout, all the way back down here. But good news for AIG. I mean, they reported earnings last Thursday and saw a 20% or a 23% increase on a per share basis from a year ago. So they're actually starting to come out of the woods, if you can believe it or not, AIG. Now, Treasury is announced on Friday that they want to dump another huge boatload of their AIG shares back onto the market and sell it actually for a profit. So this will be the third time the Treasury Department has unloaded its shares of AIG. And AIG is actually up 40% year to date, folks. So it's got a heartbeat. And it's slowly weaning off of the government's defibrillator there, and I think based on the gains in its main insurance business, global property and casualty, and also domestic life insurance, I am long-term bullish on AIG, but I'm short-term bearish. As you can see by the 3-day chart, it's just we've had a couple gap moves down. We had that gap move down after they had great earnings on Thursday. A little bit of volatility, but gap move down, and then even more of a gap move down. Probably based on the Greek and French elections, but also, you know, it's really sinking in that Treasury is going to come in and dump a whole boatload of AIG stock. They currently own, you, me, us. Treasury currently owns about 70% of AIG still to this day. And like I said, over $140 billion of our money was used in that bailout. So here's what I want to do. Let's get to the tactic. We have our strategic mindset. Let's take a look at the options. Let's use a tactic that is long-term bullish but short-term bearish. What's that sound like? That sounds like a diagonal. So what we want to do is I want to go really far out in time here, as far as we can. This is actually a leap. I'm looking at the Jan 14s, and what calls would I like to buy? I always buy deep in the money calls that are closest to a 0.8 delta. In this case, it's the Jan 14 22s. So let's create a spread, make it a diagonal. Right here on TradeMonster, you can go to trademonster.com/TGO to open a free paper trading account here, and we will add edit legs here and just kind of do this manually. Front month, the May, so we're buying deep in the money 22s. I believe they were. Let me just double check here with the 0.8 delta. Yep, deep in the money 22s, buying those calls. And we're going to sell the May front month, the 33s. Not a ton of premium in there, but the stock's gotten beaten up. It'll at least give us a little bit of premium. And let's do this 10 times and see what our risk profile looks like. Let's create an order, see what we can get this at. Obviously, we're paying a lot of money. Why? Because it's we have these deep in the money calls. Those 0.80 delta calls are probably obviously very expensive there. Let's go for 12.25. Let's analyze this real quick and take our risk profile. Obviously, our maximum profit technically is unlimited. This is based on front month call, but technically unlimited, right? We have these deep in the money calls in our pocket, in our back pocket, and if AIG races to the moon between now and January 14, we're good to go. So we're going to continue to sell the front months to fund those deep in the money calls. So I like this trade. I'm going to create an order in my paper trading account in the virtual model portfolio. Go ahead and confirm that, and we're going to be long some AIG shares, but short-term bearish. So again, that's a great thing with options. You can be kind of bipolar, so to speak. You can be long-term bullish, but short-term bearish, and that's where we are with AIG. So everything else in the model portfolio is looking great. Happy with what's going on. Interesting that volatility didn't spike up that much, but in a week since we put this trade on VXX, it's up 42% or close to $2,200. So I'm liking that one, along with that Green Mountain Coffee Roaster when we said, hey, this thing's just getting the heck beat out of it for absolutely nothing. Still like this trade. It's pulling back today a little bit with the market in general, but I wouldn't worry about it too much. Everything else is looking good, so stay the course. Doug will be your instructor tomorrow for the primary live trade brief. I don't trust the internet connection down here from Santos, Brazil, but I'll be back next Tuesday at 0900, and stand by for another primary trader alert later in the week. Matt Buckley, call sign Wiz, happy hunting. Make sure you hedge.